All right, everybody, welcome back to Cashflow Chronicles, Season 2, Episode 3. It is June 6th. How's everybody doing? Mr. Patel, anything before we kick it off with a good old intro?
Bro, this GameStop thing is just, it reminds me of 2021 again, where valuations have just
I got a
gone
story
insane.
about that. We could talk about that after the
Tell me you didn't
intro.
speculate and bought some.
Greed is good.
The stock is going to go up, down, sideways, or in fucking circles. It's all a fugazi.
Sell it all.
Greed is good. Huge upside potential, upwards of $60,000.
Man, that intro, it's kind of fire now. I think about it.
It's great.
We just need a little bit of tweaking. It'll get better. I was going to say, tell me about GameStop. Tell me you did not buy GameStop.
I did the opposite. I did the opposite.
You shorted GameStop?
Back in 2021. Yep.
And you shorted GameStop?
I lost about $60,000. Yep. Selling naked calls. Yep. I have a video. I just posted it in the chat box. I made it about 3 years ago. And yeah, that's pretty much what ended up happening.
Yep. Why would you do that?
I didn't know what the hell I was doing with options at the time. And so that's why I tell people, I'm like,
don't do options.
I don't say don't do options, but what I say is it's like, you think you're smart enough to know what you're doing. I thought I was gold, right? I thought, who would have thought that GameStop would go above $100 a share? So you're sitting there, you're selling a couple contracts worth $60 a piece or whatever they were. I forget what it was. It was like $6 a piece or something like that. I sold 10 contracts, whatever it was, but it was 60 grand worth, or sorry, 6 grand worth. Sorry, to me, and I was like, easiest 6 grand I've ever fucking made. GameStop started going to $100. The next thing you know, after hours, it goes right to 170, and I'm losing sleep. I'm sweating. I'm like, I've never felt that way before in my life. And all of it because, one, I didn't actually know what the hell I was doing. I didn't know what I was signing myself up for. And it was a freak accident, right? I mean, there's no way that GameStop at that time was worth like $30 or so billion when that was happening. It was like, there's no way that GameStop would actually be worth that. So that's why I try to tell people, man, I'm like, if you think something with the options world is not going to happen, it's possible. And so I lost $50 grand. Yeah.
Jeez.
Yeah.
Ouch. Okay.
Overnight. It wasn't like over the course of a week. It was overnight. So
it happens, man. I mean, look, not every thesis is going to play out. I mean, right now, I'm getting trolled on hardcore by everyone because I'm long snow, and I'm not bearish on Palantir. I'm just not optimistic on Palantir. The thing is, this is where you have to like take 2 steps back and always readjust your thinking. And just make sure that you have your conviction in what you're saying. And my conviction is still pretty strong. I think Snowflake is a great company. It's still going to grow. Palantir it's also a good company, but there's some downsides to it also. I think structurally, Snowflake is in a zone where they're investing a lot of money in future growth, but they're doing it now. So a lot of people are like, look at you, you're not even profitable. And it's like, yeah, I guess you could look at it that way, but like, Snow right now is really ramped up their R&D spend. Their employee headcount is almost doubled from a few years ago. So it looks like there's a lot of money going out the door and there's not enough value coming in the door. But, I guess we'll see what happens with all these investments that they're making. And Palantir is a little bit different in that they are more on cost optimized growth, where they're not spending that much money to grow at the rate that they're growing. Right. But the thing is that good or is it bad? And every projection that I'm seeing with Palantir shows that their growth is kind of anemic going forward. Whereas Snow's is going to compound. So we'll see if that ends up playing out, because that's like the Wall Street thesis versus the retail thesis. Wall Street is saying, Snowflake is undervalued. It's going to keep growing. It's got the potential to, be further. Whereas Palantir is more like the retail communities behind it saying, hey, this is where we think that there's tremendous value. So right now it's the war of retail versus Wall Street. And typically Wall Street does win, but not always the case, especially if you're seeing it with GameStop right now. So yeah, the troll comments will keep coming. I don't mind them. I'll take
It'll
them.
definitely happen. I mean, you see, the way I look at it almost is like Palantir is really homegrown. They build their technologies and stuff in-house, and then they release them to the public after using them, versus Snowflake. They have a little bit of that. They have a home product that they kind of honed in on, but then they acquire, right? So it's not any dissimilar. We know that works really well at companies like Salesforce and Broadcom. Those have done really well with that sort of strategy, but requires a lot of integration. And sometimes when you have to integrate other businesses, cultures kind of clash, and you have that kind of culture battle. And so you really have to be very strong headed about how you integrate a company. And sometimes you end up losing literally billions of dollars with respect to making some of these purchases, and they just literally end up dying. And we've seen that, numerous times throughout the years.
Secretly, anytime I'm feeling like I missed the boat on Palantir, I just remind myself, these are the same guys that invested money in Bird scooters. And they invested money in, remember that company that took blocks and put it, like, you put it high? That's how you store energy. You put a block high, and then when you need the energy, you just use gravity to pull it down, and then it generates electricity. You remember that?
I mean, there's was some weird ways to generate electricity, I'll tell you.
There were some really weird investments that Palantir made with the SPACs. So anytime I feel like, oh, you know what, maybe I missed a boat on Palantir, I'm like, no, this is the same management that thought that scooters were a good idea. So that you have to develop ways to cope, and that's what I'm doing. That's my coping mechanism, basically.
Amen. I think it all just depends on what you're looking for, and what I think both have their realms. I have a feeling that Palantir is going to come up with some really wild products that
will really. That's true. That's absolutely true. Who knows? Yeah.
And you can't. I mean, did you see your boy? You probably didn't watch it, but your boy is on Palantir.
No, I saw Ahmed. He was on AIPCon, which is great. Yeah. It's nice to see companies recognizing retail investors who've really put in the time to kind of support the company, and both Arnie and what's his name and Amit have been on there for a while now, where they've continued doing what is that thing called? Palantir Weekly. Yeah. I stopped after a while. It got too much for me to just be there. And I'll be honest, sometimes I felt like if I didn't speak up about something, it would end up getting just no, everything is great. It was just it became a very big echo chamber. And the thing is that you can do it to a certain degree, but then eventually you become that guy that constantly has to take the freaking arrows in the back. Yeah. And you don't want to be in that situation all the time. I mean, you could do it sometimes, but it does get a little bit echo chamber. To be honest, I'm not sure. I still tune into Palantir Weekly maybe once in a while just to see how you guys are doing on a personal level, but for the most part, the content just it feels recycled, so I'm just what else is new, guys? Come on. I've
gotten snippier as time has gone on, because a lot of it is really, a lot of it's just hearsay, a lot of it is just speculation. A lot of it's just chatting. And it's it feels almost if you're not saying, kind of like the echo chamber piece, it's if you're not saying it's the greatest product ever, and you're floating it to be how you're going to be a trillionaire by holding the stock, then it's almost you're against it. And it's I'll bring a realistic point of view to the show because I've used the product for 6 years. And it's almost as if I'm not even there. It's and then Arnie speaks, and Arnie has used the product one time. And no offense, I like Arnie. He does a lot of good detail, back end work, but it's up until that point a couple weeks ago, he had never used the product. So to me, I get it. You can't always have your hands on a product, right? And you can't always, like a Boeing. I can ride in the planes, but I can never fly them. So I get it from that perspective. But at the same time, it's just sometimes I feel there's just so much hot air that goes on in Palantir Weekly that it makes me skip more often than I probably should. And it's just it's almost when I speak, it's okay, here's Matt. Nobody really cares, but it's like, I have hands-on experience. You should probably fucking listen. But Amit's done a really good job, right? When Amit talks, he generally doesn't. He does fluff it up a little bit, but he generally just does a pretty good job relaying the actual good news to people. So he does a good job.
The other thing is Palantir's, there's no shortage of good news for these guys. It feels like everything that comes up seems to be like on the up and ups. And the thing is, like, the market recognizes it because it's the law of big numbers, right? So it's almost like, oh, Palantir got a $400 million contract with the army, right? And it's like, yeah, it's a contract extension that runs 10 years out. It's not like they're going to get $400 million right away, you know? So it's kind of stuff like that, I don't know. It is what it is. I genuinely like the company. I think they're doing great things, especially in the defense space. The valuation, I'm not a big fan of, especially with the growth being what it is. Also, the dilution piece really starting to make a little sense to me. But, on one hand, when I look at it from a financial analysis, it's almost like, look, we're generating all this cash, but we're doing it because we're paying our employees in stock, and we're not counteracting it with share buybacks. And eventually they're going to have to counteract it with share buybacks. So if you look at the diluted share count of Palantir, it's gone up, up, and up.
But that's the thing. You can say the same thing about Snowflake too, right? I mean,
no. See, that's the thing. If we look at it we could do an analysis later. But if you look at
it, you apparently know better than I do. Yeah. I mean, Palantir's at least come down to $100 million a quarter, which, if you think about it, is about a 1% dilution per annum at this point. I don't think Snowflake is nearly.
No. Take a look. Hold on 1 second. So, but do you guys see the screen right here? Okay.
Yeah.
So, if you let's look at Palantir, right? PLTR. So, if you look at the just overview, we're not doing high level research here. So, if we look at our trailing basis and we look at shares outstanding, right, on a diluted basis. Look at the shares outstanding, what they have. They went from 1.8 billion shares outstanding to now 2.4 billion shares outstanding. And that's diluted, okay? That's not basic. There's a big difference between the basic and diluted. All right? So this is the major problem. So you can see the share change where the shares are constantly getting issued. Now, if you look at this on Snowflake also has shares going up, but if you look at their shares outstanding on a diluted basis, right? Oh, sorry. This is its growth rate. So it went from 291 to like 333. And their share dilution, according to them, their long-term goal is less than 2% per year. So yes, they do have, a lot of share-based compensation, but what ends up happening is if you look at on their cash flow, at the same time, they're counteracting it with buybacks. So right now they did, within the last year, they did almost $792 million worth of share buybacks. So I'm not saying that, each one doesn't have its positives. It's just from a dilution standpoint, I think Palantir is diluting way more. And the thing is, they're retaining that cash on the balance sheet. So my thing is, hey, eventually y'all are going to have to use some of that cash to kind of pay down, pay some, buy back some of those shares. Otherwise, all you're really doing is screwing yourself for the future with EPS growth, So I don't know. I can't hear you, Matt. I think you're muted.
I am muted. Yeah. So I know they bought a little bit back last quarter, but nothing to the extent of, actually putting a dent. And I'm curious as to what they actually do and when and why. Because this time next year, they're going to have if they don't do anything with that capital, they're going to have over $5 billion on the balance sheet,
right,
just sitting there. So I'm with you.
I mean, it's not a bad problem to have. Having that much cash on the balance sheet. The other thing is, because of that cash pile, it gives, in my opinion, okay, this is just me saying this. Not everyone doesn't have to listen to me, but the more cash that they build up, the more they can buy short-term treasuries and boost their net income, which means that now what ends up happening is that money that's coming in interest gets floated into their operating income side. And it looks like, hey, look at my operating income. It's so good, right? Well, it is good right now because interest rates are high. But if interest rates start coming down, now
Yeah.
you have to now the cash
It's
pile is
challenged.
going to be
Yeah.
worth less. And the thing is, if your share price is really high, that means that the buybacks that you're going to do are not going to be as impactful to your bottom line, you know? So basically the best time to buy shares would be when the company is undervalued. So right now, that's one of the reasons why I think Snowflake bought back a whole bunch of shares last quarter. And I wouldn't be surprised if they do another buyback going forward again, because they do generate a tremendous amount of free cash flow that they can keep using to buy down the outstanding shares
Well, yeah, I mean
and
they're
make
they're
sure
in the
that
same
dilution doesn't happen.
they're in the same boat as Palantir, right? I mean Palantir has a $400 million drag just based off the share-based compensation, right? And that when that
Yeah.
hits the gap net income, I mean you literally go down by $400 million. So it's the same problem that you have with Snowflake. So I don't know. I would like to see them deploy the capital. I'm not 100% for share dilution. I think, or sorry, not share buybacks. It's not my favorite thing. I would prefer them actually moving the dial, but I do like my share. I can't say I don't, right? I love Google. I love those guys that are buying back a shit ton of stock, but they're also putting in $25 to $30 billion worth of capital expenditures a year, right? So they are investing back in the business versus a Palantir. It's like they're literally just letting it pile up. And to me, it'd be like, okay, well, give us a goal, 5% of free cash or 10% of free cash goes to buybacks, right? Because you're not spending any capital expenditures.
Look at damn PayPal, man. PayPal's 100% going to buybacks.
And I'm not saying that's the right thing to do.
In my opinion, right now, while this stock is undervalued, hell yeah, why not?
I mean for PayPal, yeah.
PayPal, especially. I mean, look, this is the one thing I think people are missing out on PayPal. Let me just share it. And I'm not super bullish on PayPal, but you got to give this some thought.
I see why people like it. It's just not for me.
It's transitioned. I think it's transitioning from growth to value, right? So if you look at like PayPal in the lens of a growth company, it completely fails the sniff test. If you can't grow double digits, you're not a growth company. Right now, they're growing at even like 8-9% per year, which is, believe it or not, especially because it's got so much of a revenue. It's not that big of a issue. The key here is that if you look at their shares outstanding on a diluted basis, look at this. It is monstrous buybacks back, and especially since Alex Chris took over a few quarters ago, it's just going down, down, and down. And that's why if you look at their EPS growth is a solid 60-70% growth right now. So it just goes to show that if you're somewhat good at managing your cash flows, you can bring a lot of shareholder value to it. So right now they're generating about 5.5 billion roughly in operating cash flow. So you can see here that they've actually become more operating efficient, right? So we look at this on a trailing basis. You can see here the last 3 quarters, they've grown their operating income tremendously. Now, what does this operating income do for them? Well, it gives them the opportunity to deploy all that capital back into share buybacks. And you can see here, they're spending majority of that in share buybacks, So,
but then go to CapEx. Look at what CapEx has done over the past
right here.
8 quarters.
They're barely spending 500 million in CapEx per year.
It's shrinking, right? And so that's to me, you gotta keep. I mean, I'm assuming a lot of that's the server upkeep and stuff like that. But like, if your net margins are that good or your gross margins are that good as an organization, to me, I would be wanting to reinvest back.
Well, I mean, it's a fintech company. Why do you need to see? Here's the thing: it's not a capex heavy business. You're not buying property. You're not buying, depreciating assets with it. All you're doing is
why is it depreciating $1 billion a quarter?
What do you mean?
Where? Look, the depreciation amortization.
Oh yeah,
right?
yeah.
Something's got to be depreciating.
Well, the depreciation's going down too. So they're probably relying less on their own infrastructure and maybe outsourcing some of it. So, I mean, that's a pretty big downward move in their depreciation also. Look at that. So they're depreciating about 1.3, which means that they had previously had probably a lot of CapEx. And as those assets roll off, they're getting less depreciation. So, we'll see what happens.
I don't know what the plan is for these guys. I mean,
I'll tell you, it's they're gonna go the route of what do you call it? AutoZone. They're gonna just eat their own tail, constantly just buying back more and more shares. I mean, their buyback yield right now, let me just go to it. Their buyback yield is roughly, look at this, it's almost like 5.4% in just buybacks.
yeah,
It's not bad. With a market cap about 70 billion, enterprise with 57 billion. So if they're spending about 5 billion a year in buybacks, that means literally every year they're taking out 1/20th of the company.
you can only get so profitable though without establishing a new base. You know what I mean?
Well, the other thing is they're still growing. Their growth rate has dropped off significantly. So I'm not denying that. But at the same time, they can maintain if they can maintain a consistent like 8%.
Oh yeah, then it'd be golden. I just don't know if they will.
Yeah. Well, that's the key, right? That's one of the things that we have to keep an eye on if this is the case. Like I said, I don't mind companies growing at single digits, investing in companies like that. Believe it or not, I'm for that, as long as they're able to engineer shareholder value that's growth like using that, whether that be through really high dividends or whether that's through really good share buybacks.
Yeah.
And the great story behind that is AutoZone. I always point back to the AutoZone thing because AutoZone doesn't grow like 20, 30, 40% year over year. But if you look at the share count,
it's steady. Yeah.
It's steady.
Yeah. I mean, I forget what it was. It was like 40, it's like 50,000% return. So 50x. And I think the majority of that was obviously buybacks, but they did grow revenue and profitability of the organization by like 4 or 5x, right, over the course of the last 25 years. So part of it obviously was the buybacks, but then I think they bought like 85% of the shares outstanding back or something like that. And then they've increased profitability by 4 or 5x. But that's my fear though, is it's like once you get so into the buybacks, you almost attract a certain type of investor. And I'm not saying it's
you attract Warren Buffett. You attract Warren Buffett.
Maybe, yeah. I mean, maybe that's possible. But then, what if you do say, "Oh, well, we're going to make a pivot, and we're only going to do 25% buybacks this year"? Then you're going to piss off all your investors. The share price goes down. So it's like there's a balance, right? And I don't know if giving 100% of free cash back as buybacks is the best thing to do, right? Anyway, that's just. It could be. I'm probably wrong, but I'm in a very buyback heavy industry, as you know, and to me, instead of growing companies, I feel like a lot of people will, in order to increase profitability per share, they'll buy back the stock, and I don't think that that's necessarily the right thing to do.
But the thing is, like, your industry is very cyclical, so the thing is, it all depends on when they buy back. When you have cyclical businesses versus up into the right businesses, it's a big difference. Like AutoZone, Auto Care is pretty steady. I mean, yeah, there's times where you're going to see some drop-offs here and there, but it's nothing meaningful, whereas oil and natural gas, I mean, the price of oil drops 30, 40%. Now, all of a sudden, your free cash flow doesn't exactly support the buybacks anymore, right? So yeah, whatever, man.
So what do you think? Do we move into the moves that we made? Do we keep the moves secret a little bit longer?
Let's take a look. No. We could talk about it.
We've had some fun over the past few days.
Yeah. One of them is a completely speculative move. So please do not replicate it. Okay. So
it's rated from highest value to lowest value in the portfolio.
Okay. So, Maddie, how much are we up for the year so far? Because I think that's always important, because I think
33% year to date.
Okay. So 33%.
This doesn't include today. It includes up to yesterday, but 33.5% compared to 13% for the spot.
Okay. Good. So we're
rather well.
Yeah. So I want to keep beating the S&P. I think the goal for us should be to beat the S&P. If we can beat the S&P, we're doing better than most hedge funds, right?
Yeah.
So that will be our
and publicly, which is pretty impressive.
And publicly, yes. Yeah. So see, Strongman, when he comes after us, he can't say like, "Oh, these guys, they're just."
They'll probably say this is Photoshop, but it is what it is.
Yeah,
I really don't
a bunch
care.
of grifters.
Yeah.
All right. So what did we do, Matt? So go ahead. You explain that, and I'll explain some of the logic behind them.
So we sold a few runners. So I'm still long Dutch Bros in my personal portfolio, but you guys have probably seen Dutch Bros has been on an absolute tear. I think we bought in I think it was only 2 shares of Dutch Bros at $26. I think we sold it at like $38.50 or $39.
Mhm.
I think it's a little bit overrun at this point. The reason being, they had a really good conference at TD Cohen, I think on the 4th or the 3rd. And then the next day, the stock was just rallying. It was up like 10%, and then it ran another couple percent the following day after that. And so they really hit it out of the park. Christine did a phenomenal job. They introduced the new executive team. They answered some Q&A. I think they're making some really bold moves, but bold moves for the right ways. And so obviously the response was very well received. So I think there's some time for it to cool off. So we took that. We also sold a little bit of, because it was ex-dividend day, for those of you guys that are following, for BPYPM and BPYPN. Keep in mind, we're trying to sell these things during the morning pre-market, right? So I'm laying in bed. I'm getting messages from Hot Chris at like, I don't know what it was, like 5 a.m. or something. It was before. No, it wasn't 5 a.m. because it was pre-market for me opened to 7 a.m. So it was like it was early 5 something my time, and it had just turned 7 a.m. Eastern. So where I could actually start trading. But I think I was answering emails for a couple minutes before I was able to trade. BPYPN and BPYPM are very illiquid pre-market, but so we didn't make any moves in BPYPM. I couldn't get anyone to bite, but BPYPN, I think we sold about 66%. We sold another 5 shares of HIMS because we were up a good bit on that. So Bros, BPYPN,
no one ever
HIMS.
lost money taking some profits, man.
Yeah, all of them
have
up.
to get used to that.
Pretty damn good, right? So
here's an example. We saw Celsius had its run. We took nice profits off of that. You know, when the valuation that you have gets to a point where you need to just take some off the top, take some off the top. There's no shame.
Yeah.
You know,
in the background when we're chatting, and I'm not sharing my screen, I can see how much we sold Celsius at, but I think we bought in the low 50s in the public portfolio. I don't think I got in as good of a time in my personal portfolio, but I still made out really handsomely for that. And then you guys saw, I think last time before we talked, we at that point had already bought into the cruise lines, Chris. But we talked about TMF, which is triple leverage 20-year. So that'll probably play over the next couple months. So we bought about 3 shares of that, which we probably would have added more. Some of the stuff that we sold would probably have gone into that, but I'll let Chris talk about the
I'll
4th
explain.
largest position because that's kind of a pivot for what we've talked about in the past.
Okay, so Tellurian. So news broke last week. We were having this conversation on Cashflow Chronicles about Tellurian. Basically, they had sold their upstream assets, and they were, basically getting about 260 million from it. I did some detective work on the company, and I found out that the CEO of the company that bought those upstream assets in the Haynesville area, his total company's net worth, total market cap is about 9 billion. It's a privately owned company. They have some joint agreements with Tellurian. They have something called a HOA or a H, where basically it's not a PSA, which is SPA, a sale and purchase agreement, where basically they agree in the future to, take delivery of natural gas from the terminal that, Tellurian is trying to develop. So I looked at that guy, I looked at the company, I did some quick digging. Then rumors came out that Saudi Arabia, their investment fund, is kicking the tires around diversifying into some natural gas export facilities. And I said, that is interesting because it fits right into their MO, right? They're an energy company. And at the same time, they know that one day oil is not going to be the main driver of their future economy. They want to diversify away, and natural gas just works, so, so I saw some synergies there, and I was just like, you know what? Let me just take a look at this whole thing quickly. And I realized that Tellurian, number one, has an extension with FERC to develop their terminal going forward all the way into 2029, which is amazing because right now the Biden administration's basically paused all new construction of LNG terminals. So that means that the existing assets are worth more than what they were just literally not even 6, like 3 months ago, because the approval just came not too long ago. So that's number
Somebody
one.
can't just go and buy land in North Carolina or Georgia and start building an LNG plant, right? They have to either have it approved or permitted, like Driftwood or Rio Grande, right?
Yeah, and it's really hard to get the permitting done because you have to do all sorts of environmental surveys. You have to provide all sorts of details and planning. It takes literally 5 years just to get FERC approval before anyone says, like, yeah, you know what, go ahead, build a plant there. So, that's number one. Usually what happens is there's 3 things you need to have a successful LNG transfer terminal. Number one, you need FERC approval. So you need approval from local and state and federal government saying, yes, we agree to basically building this terminal. So that's number one. Number two, you need financing, right? So you need to make sure that all the financing is lined up. But before you can get financing, you also need customers, because no one is going to invest in your project unless they know that you have some customers coming into the future. In the past, Tellurian was able to get some people to sign up for natural gas, but a lot of those people dropped out. There's a lot of speculation on the reason why they dropped out. Total was one of them that dropped out. There's quite a few that dropped out. I think majority of the reason why is because Sharif Suki, who was the former CEO of Cheniere, then he got kicked out, and then he started Tellurian, and he got kicked out of Tellurian. I think he was a major problem in setting terms for some of these deals where they were way too onerous on the counterparties. And so instead, what happened was Tellurian would just, they canceled on him basically. Now the new CEO, the new executive chairman just let the CEO go, by the way. I don't know if you know that. Octavio Simonis, basically his contract was up a couple of days ago, and basically they just didn't renew it. They said, sorry, be out of here. So they're, kind of working to change up the management a little bit over there. And the thing is, the valuation has gone so deep into like value territory that someone could come in, buy them up, put the construction, like get the customers to sign in, even if it's not at like the greatest return rate, and still make money. So basically you've done all the work already. So imagine right now you have a house that you got permitted, you started building it, you put the basement in, and you were building it, and now all of a sudden you don't have the money to continue. Now, does that mean that company or that house is worthless? Like, no, it's worth something. And that's where I think we were like, hey, let's take a look at this. And I was like, all right, you know what? This could be a nice speculative bet for us, where if they do get some financing line, well, number one, they need some customers lined up. If they do get the customers lined up behind them, to offtake the gas capacity that they're aiming to build, then that means that the financing will come right after that. Because right now there is demand, there is ample opportunity for financing. So next decade kind of proved it out, and I think they're going the next decade route, where what they're going to do is they're going to sell a good amount of equity of their first 2 trains into their counterparties. So basically it's almost like saying, look, we'll do a PSA agreement, right, which is purchase and sales agreement, but you also get equity. So what happens now is that the counterparty is a stakeholder in your business, and when you have that, you kind of have like a strong fundamental business case to be made to loan officers, right? So like right now, one of the great things about next decade is that Total, which is a huge French multi what is that thing called, MNC, super major, they're a counterparty, so that there's going to be a good amount of demand. I think the other one is Mubadala is also on there with next decade, so they have really strong counterparties. So now Tellurian just needs some strong counterparties on its side. So it basically has to line up SPA agreements and possibly sell some equity to these guys. And now you've got a counterparty that's wholly invested in your future. And if you get that, then the financing comes. And the financing comes in, you do really well. Now, here's the thing. If you got into Tellurian and the valuation was $5 billion and you're only getting let's say 100 million or 200 million of distributable cash flow, it's not that good, right? It's kind of like, that sucks. But the valuation of Tellurian right now is 500 million, which means even if you only make 200 million on your distributable cash flow in the future, that's a freaking almost 50% return. And that's on phase 1 and 2 with the first 2 trains. 3, 4, and 5 have better economic returns that can get you to something like next decade, where now you're generating about $1 billion. So if you think about it, that's almost like if you buy now, you get 200% return per annum in distributable cash flow way out into the future. But the business case makes sense right now. So a lot of, I think they're, for the most part, they're going to be able to get some SPA agreements done later this year, and they're going to be able to FID by I would hope by the end of this year. If they get FID by the end of this year, this thing will be worth like $2-3. So the way that I would categorize this is, if we lose, we will lose small, right? Whatever, how much did we put in? Like $300-400?
Something like that, yeah.
But if everything goes right, this could be 100x return.
Yeah.
You know, so it's asymmetric returns for us. So
it's a big boy, right? And I think this is, I think it's 5 trains at once. It's not like a 2-parter. I think they have capability to go to 7, if I'm correct.
No, so they have, I'm trying to remember. They have 5, but they're only right now willing to do 2 because it doesn't because it's hard to get the financing for all 5. These things are billions upon billions of dollars. So the key is get 1 and 2 done halfway through construction, then they can work on selling 3, 4, and 5. The key is getting the first phase out of the way. And the thing is, the SPA agreement for that upstream seller is somewhat important in my opinion. The other thing is the other person on the other side. I did a quick analysis on him because just to get an idea of what his investing style is like. Because whenever you work with a counterparty, the first thing you want to find out is, what is the other guy's interest in all of this? And from what I can tell, and here's the DD that's out of the market that you're not going to see on a Bloomberg terminal. And I don't know if I shared it with you. I shared it with the Patreon people, but I'll share it with you. Oh, you're on my Patreon, so of course I shared it with you too. So Saudi Arabia has an investment arm called the PIF, right?
Yeah, public investment.
The PIF. So the PIF has a crap ton of money. They just did a share sale not too long ago with Saudi Aramco, so they've got some cash. PIF is heavily invested in LIV, which is the golf tournament, right? Mm-hmm. One of the things that LIV wants to do is make inroads into the United States, which is the biggest golfing market. And the person who's on the other side of this Tellurian deal, he has a golf course in Dallas that he really he worked and developed like crazy. Okay, so it's called Mary Doe. Can you believe one of the stops on the Live Tour is going to be that golf resort that he's built? So there is a Saudi connection in here somewhere. And the thing is, I think it's enough for us to make the bet. We're saying, you know what, this guy, because he has economic interest in Driftwood, will work with the Saudis and say, look, you need diversification and you need presence here in the United States using your for LIV. I will make both happen, but you have to commit to a SPA agreement, or you have to agree to a giant equity investment into this project. And I think that happens. So this guy is I would not be surprised if this guy is probably buying shares on the fucking open market, taking a stake in this company at the same time in the background. And the thing is, none of it actually has to be reported because he's not it's all private, right? So like I said, I'd have to find out, but I would assume that this is happening. And if this does happen, you're looking at a pretty good return in terms of shares. So.
Yep. So I'll take a more of a fundamental approach rather than speculation. So, I mean, we saw in February timeframe the conversations going on with Next Decade when you started to see the stock move, right? And this is 3-4 months ago. People weren't certain if it was ADNOC. People weren't certain if it was Aramco, right? And all that's based off of diversification outside of the Middle East and trying to get footholds into other countries, because obviously the more diversified you are globally, the better you are. And why are they trying to diversify into LNG, right? And Chris kind of alluded to this a little bit earlier. So right now, over the past, say, 5-6 years, LNG terminals have been coming on left, right, and next to each other all along the Gulf Coast. And so right now, actually, we're in an abundance of LNG. That's why you've seen global LNG prices kind of come down over the past 18 months after what happened with Russia, right? The short-term supply demand. And now they're back down to like low double digits, right? But if you look into when next decade's Rio Grande comes on, if you look into when Driftwood is supposed to come on towards the second half of the decade, a lot of people don't have a lot of additional supply coming on, but the demand is going through the roof, right? People are wanting to move away from coal. People are wanting to move into cleaner energies and away from oils. And so with that, you have LNG, which is literally the cleanest hydrocarbon you can use, lowest intensity in terms of carbon emissions, etc. So that is the cleanest thing that you can use that's still a fossil fuel. So everyone's moving to LNG. It's easy to transport, or easier to transport these days. And you have developing nations that are starting to really wake up and move it, specifically in Southeast, or need it, and specifically in Southeast Asia. So what do you have? You have two Middle Eastern oil companies that are looking to diversify. They already have a very strong foothold within the oil market. There's a future squeeze for supply in the LNG market. That's one. Two, Saudi Arabia specifically has a lot of natural gas reserves that they potentially might have their own LNG plants, kind of like Qatar does. Qatar is probably the second largest LNG producer in the world, potentially behind, either slightly ahead of or slightly behind the United States. I don't remember. But you see Qatar is kind of called out there in red on the graphic, and they have a whole bunch of investments kind of coming on towards the second half of the decade. But if you think about it, whoever controls LNG going forward is going to be like controlling oil back in the 30s, 40s, 50s, right? So that is going to be the future kind of going forward, as everyone tries to continue to de-rely or lessen their reliance on oil because it's more carbon intensive than, say, LNG. So it allows them to diversify. It allows them to gain potentially the know-how, specifically for Saudi Arabia and Aramco, to get that know-how for when they do actually start building their LNG facilities, their ability to kind of say, hey, we have experience with this. It's not our first rodeo. Let's get after it. Now, that's all I'll say, because I shouldn't have even probably said half of that. So, Mr. Patel, what else?
Yeah. So let's bring up the portfolio again real quick. Man. Dude, I was out today with the wife. I just need to exercise a little more, man. I'm getting older and unhealthier. Let's see. Okay, so we explained Tellurian, and that's the same case to be made about next decade. We're up about 40% on next decade. That one got away from us. God damn it! Like I feel so like and I don't know if we're gonna be able to get back in it again at a lower price than we are right now. We only bought 7 goddamn shares. It was like staring us in the face, Matt. And this is what happens sometimes. What are you gonna do? Okay, so let's move on to the cruise lines. The cruise lines are a value play on a recovery in the cruising industry. People love cruising. Okay, I think I beat Carnival to death on some of the other podcasts that I did, but today I'm gonna beat Norwegian to death. All right, so just hold on 1 second. Let me just bring this up. in my opinion, Norwegian is a safer play than Carnival because, believe it or not, they are at a and what was that?
Oh, I did forget to
NCLH.
mention our one share of Snowflake we did sell. So you'll have to explain that one, Chris.
Yeah. I'd rather not, but okay. So this is Norwegian Cruise Lines. Right now they're worth about $7.8 billion. They have about 8.92 billion in revenue. They took a hit post COVID, but one of the things that I think the market is not really taking into account is that unlike Carnival, which has chosen to go the route of we're going to cut our way into prosperity, Norwegian has decided to basically grow their way into prosperity. So if you look at what they've done in terms of returning back to their norm again, in terms of their revenue has got back and now exceeded what they were doing in 2019 prior to COVID. They've got a bunch of new ships online. They've been able to operate more efficiently and just get a whole bunch of on. So look at this. Now they're generating almost 9 billion in revenue. All right. Before COVID, 6.4 billion. So you're looking at a huge growth in the total revenue, and they've still got more ships coming online, which means this revenue number is going to keep climbing. On top of that, if you look at it, the operating income for this company, the operating income has basically gone back to the same level that it was in 2019. Okay. This number will continue to improve as they gain better operating efficiencies. Their interest income has slowly started to creep up because, when you take on a lot of debt, that's what happens. But I did a credit analysis. The debt that they have is manageable. Their earnings right now, their EPS is positive. So they're earning more money than they were previously, right? So their EPS right now is 72 cents per year. But the key that I want to just highlight to everyone is this right here, which is their EBITDA margin. Their EBITDA margin prior to COVID, right? It always sucks to see this, like these COVID maps, because COVID always like, makes the chart look like it's fucked up. But prior to COVID, their EBITDA margin was close to 30%. Okay. What does that mean for us as investors? Well, that means that right now their EBITDA margin is around 22.91%. If they were to go back to their EBITDA margin that was there before COVID, right? But at the same time, you take into account huge number of revenue growth, you got yourself an amazing, amazing opportunity going forward. Now, according to the projections, which I believe are actually somewhat low, you're looking at about $2.45 in 2026. I don't like looking at numbers way out into the future only because like the number of analysts is like really low, but this is a steady business. If they're able to generate about $2.45, like about, almost $2.50 per share in 2026, which is in a couple of years from now, you're looking at a share price, and usually this thing trades at a multiple about 20. But let's say we want to be conservative and we only do 15. You're looking at, what is this? 2.45 times 15. You got yourself a $36 price target on this in less than 2 years. So that means that literally in 2 years, this 18 is going to turn into 36. All right. And this is a conservative estimate, not a pie in the sky estimate. So I think it gets there, in which case in 2 years, who's going to give you a double?
Good question. Yeah. Good question. No, I definitely see the potential for our cruise line friends. I'm curious to see how it pans out, though. I mean, I think positive, though, and I think the big nature of why you've seen such a move so far is because of the news that came out of Canada, right, with the FOM, not their Federal Reserve, right, and they cut rates, and they're starting to cut rates. And so with that, I think everyone's starting to now look at Europe, and they're starting to look at what's the United States going to say or do next week when the FOMC has their meeting.
Europe cut today. They did a cut? Yeah.
Oh, I didn't see that. Okay. Very good.
Yeah. So Canadians are cutting. The Europeans are cutting. The reason why the market didn't react as positive is because the Europeans, when they cut, they were like a little bit waffly on their cut. They're like, we're cutting, but just know that there's no plan of future cuts. We're just going based on the data, right? That's what they're saying.
That's
So if they
probably
see
what
a
I
return-
saw. I didn't read the
Yeah.
whole. I
Yeah.
saw an article. I don't know if it was 2 days ago or what. That they were either waffling, but if it happened today, I definitely didn't read a headline today. I was in the zone at work, so it might have been yesterday when I was reading an article that basically said, "No, we're not gonna cut," but sounds like they did. All right.
So this is where, if you want to bring up our portfolio again, one more thing, which is why we ended up buying some TMF. If you want to put that up, Matt. Oh. Okay. So one other position that we have in there is TMF that we added. These are triple leveraged ETF for long dated treasuries. Now, why did we pick this one up? One reason is because with all the cuts that are happening in Canada and Europe, I think investors from both countries, as more and more cuts start to come up and the US does not cut, you're going to see capital flowing into the long bond in the US in anticipation of cuts by the Fed, right? So now you've got the long bond in the US starting to kind of go down. So as we can see, literally over the last couple of weeks, let me just bring up the 10-year. This is happening. Share screen right here. So over the last 5 days, the 10-year went from almost 4.5 to 4.29% in yield. That means that bond prices are going higher. So people are buying up the long bond. And if we have a triple leverage position in this, that means that our position going up is really, really stacked higher, you know? So I think that the yield is going to keep going down back to about 3% by the end of the year, in which case TMF is going to do very well going forward. So we'll see what happens. I think the new data that's coming out tomorrow will be a good help. Non-farm jobs and payrolls is tomorrow. So if we get a cool number, that means that 10-year will take another dive down, in which case now you're going to see TMF right up.
Yeah.
So,
and you guys remember when there was a lot of this chatter, I think we've been in a kind of a hiatus for the last 3 or 4 months with respect to when the hell is this interest rate going to happen? It's always pushed out a month. And now it seems like we're getting to the end, 2025, there has to be, from what it feels like, 2 cuts at a minimum. And so here we are going to be entering the second half of the year, and there's yet to be a cut. So I feel like the Fed is kind of putting themselves in a box at this point. They have to. Now, you remember Chris and I predicted well, and I wish we took the TMF position back then, but we just did TLT towards the end of last year. I mean, it wasn't massive, right? But I think it was like 10 or 15%. We made a little bit of money. We traveled it from like the low to mid 80s to like the mid 90s or something like that. And we were waiting. We sold because we were waiting a little bit more positive talk. And that's when you started getting some of the floundering in the January timeframe that, people were saying March. And here we are now in June, and obviously not having any cuts. So now it feels like the chatter is back. You've seen interest rates go up since the January timeframe. So that's where Chris is kind of making this pivot point bullish bet that, hey, we've already seen things creep up. Now we're kind of putting ourselves in a box. Feels like it has to happen. And so we'll play it by ear. It seems like obviously Canada did. Europe, from what Chris is telling me, has. So it's either going to be very strong worded language by us within the next week, or a cut within, say, 2 months' time. Doesn't sound too far fetched now that you have other people. But generally, the U.S. is a little bit stronger of an economy than Europe and Canada. And I feel like we can last a little bit longer before having to cut, because we're the strongest currency out of all.
Yeah. The other thing is GDP wise, the Europeans' GDP is starting to kind of go down a little bit too. And they're still in recovery mode. Canada is the same thing. For us, our GDP was revised lower, if you remember, for Q1. So all the signs are pointing to an economic slowdown. So now that's giving the incentive to the Fed to say, you know what, maybe we don't need to, be so hawkish going forward. So right now, I think a lot of people were like, oh, we're not going to get so we went from in the beginning of the year, we are going to get 7 cuts to now some people are saying we're going to get no cuts. And in my estimation, we're probably somewhere in the middle. So probably 2 to 3 cuts. I'm leaning towards 3 because I'm a little bit more optimistic on future data coming up a little bit sour because I'm looking at housing prices and rent. Rent is basically flatline. Housing is starting to come down a little bit because inventory is starting to make its way into the market and I'm seeing price reductions. And on top of that, you've got energy, which has been going downward a little bit. So that is going to lend some help towards the back half of 2024. In terms of energy inflation. So every reading that I'm looking at points to a more stable CPI, in which case now you're going to see a gradual decline back to the Fed's target of about 2%, which means it's going to give the Fed the go-ahead to at least start projecting out cuts. And remember, the Fed has 2 tools. They don't have to cut. They can just jawbone their way into getting the economy to do what they want. So they don't have to say, we're cutting. They could say it's likely that in the next quarter we are going to start cutting. It's likely. That doesn't mean we will. It just means it's likely. And basically the same impact can happen. So I say right now we're in the point where we need to find a lot of companies that, number one, can weather an economic recession because they're not necessarily dependent on the consumer being super strong. And I know cruise lines is antithetical and is against that. It's the counter to that. But the reason why I say cruise lines is because cruise lines have a bigger vulnerability because of their debt than they do of consumer spending slowdown, primarily because the demographics that skew towards cruise lines skews towards the more, retired and people with a lot of time. So those people are somewhat more insulated against a recession right now. So if you look at like the demographics of cruisers, they're above the age of 40. The recessions typically, they impact younger people, younger households way more. So there will definitely be some impact to the cruise lines in terms of demand, but the benefit of lower rates will far outweigh the negatives of maybe shaving off a few points on margin at the top. So that's the bet that I'm making with the cruise line. So there's a kind of a different thing. So.
Very good. Do you want to talk about GameStop or we wasted our time talking about other stuff?
I mean, we're real investors, so it always feels like GameStop's a waste of time.
I mean, the only thing I'll say about it is it just doesn't feel real, right? I mean, I get how he made 56 going into what is it, 40 or 50 million or whatever, but him to just show up with like $200 million and then now it's worth over 500. It just seems like something else is going on, right? He's either not acting alone, he's formed a conglomerate of people. I don't know what the answer is, but
he could be partnered with a hedge fund. I mean, imagine right now you had soft capital lying around, you found Kitty and be like, hey, listen, let's kick the teeth in of some of these guys. I'll back you financially, right? Here's a couple of $100 million. Buy up the shares, buy up the call options, and then put the word out there that you're bullish. And boom, now all of a sudden you got yourself a giant spike in demand. And now you can slowly dump on retail shareholders. And the thing is, he isn't doing anything illegal. It's unethical, but it's not, in my opinion, it's unethical. Because what you're doing is you're getting the hopes up of a lot of people in anticipation that, there's value in GameStop that other people are not seeing. Clearly, there is not as much value as, I don't know. Maybe I'm wrong. Fuck that. You know what? I'm the guy that said buy Snowflake. So what the fuck? Don't listen to me. Listen to that guy. The guy, I'm the jackass right now, just beating the S&P, but you know what? I'm also the jackass that said buy Snowflake. So I don't deserve any.
Yeah, keep in mind that 30% return includes a 13% loss on our Snowflake share.
Yeah, it happens, but this is where position sizing comes in. You go all in on one company, you deserve to lose your money. You have to
Yeah.
make sure you're realizing that not every one of your positions is going to work out. By the way, long term, I think Snowflake is going to be fine, but
this is some
sometimes it happens.
repositioning, right? I'm sure some people are making their moves into other positions.
Yeah.
And it could just be a short-term movement, just like we always see. And in a month's time, 2 months' time, it could very well be an opportunity to buy back in after it's had its time to settle down, and it very well could be what we do, depending on what happens in the portfolio. I wasn't expecting to sell HIMS that early. I'll tell you that damn much. But when you're up 50% in the matter of literally like 2 weeks, 3 weeks, less than 3 weeks, probably, you just gotta do it. I wish I had some in my personal portfolio, but it is what it is.
Yeah. See, that's the key. Everyone always remembers your losses. No one remembers the other game.
Yeah.
I think Burry right now gets buried on some of this stuff. Like, I think Burry was actually super bullish on Baba and the China stocks, and that's not doing well for him at all. So it happens. What are you gonna do? All is the only thing I'll say about GameStop and AMC and some of these meme stocks. I am not against people buying or selling them or speculating on options and stuff. I'm not. You are a good individual. You're trying to better your life and your family's life. And you want to basically take the risk. By all means, do it. You're your own person. But understand that you should go into this like you were going to Las Vegas and putting your money in a slot machine. The likelihood is that you're going to get nothing. So if you're comfortable with that, fine. But that doesn't mean it's not fun to, crank that thing back and forth. Because me and the wife, we love going to Vegas. And one of the things we love doing is going to the slot machines. And we've actually won more than a few times. So did I tell you, like, last time we won like $2,000-$3,000 on one of these slot machines? Yeah, it was good. It was really good.
Awesome. Nothing like a good old hand pay. Yeah.
One Vegas thing that really like pissed me off. During my bachelor party, we went to Las Vegas. I spent about $2,000-$3,000, and I lost about $1,000. Right? My cousin, who by the way is a fucking millionaire, the guy's like, his dad owns like a whole bunch of gas stations, motels, whatever, and he's a dentist. All right, this dude is like the most privileged person ever. This motherfucker wins a jackpot at Vegas on the slot machine. So we go to breakfast one morning. And he's just like, hey guys, what's up? And I'm like, he's like, guess what happened, guys? I'm like, no, what happened? I just won X, Y, and Z dollars. And I was just like, the fucking rich keep getting richer. Like, this is just
it's against you, Chris.
Bro, I became a Democrat for 5 minutes. I was like, we need to tax the rich.
You're like, but it's my bachelor party. So,
Yeah, son of a bitch. I should have asked him for half of it. I'd be like, no, if it wasn't for me, you wouldn't even have that. No, I was like hating on him so much. I really was a Democrat for 5 minutes. I was like, we need to tax the rich. We need to get like 99% of all gambling winnings should go to taxes, but it is what it is.
Man, I'm trying to remember what I was saying. Do you have Dutch Bros in your portfolio or no? I know you have a lot of other things.
No, and I sold Dutch Bros a little while back. I needed capital for the cruise lines. Like I would say I am probably more bullish on the cruise lines than probably a lot of other industries right now. There was a time where Meta, Facebook, Amazon were the main drivers going forward, but and those are still good core positions to hold on to. But right now, in terms of just future projected out value, I just see Norwegian especially as being so damn undervalued, considering that you saw the revenue numbers. The revenue is almost like 50% higher than what it was pre-COVID. Their margins are improving by the quarter. So it's almost like a foregone conclusion that this thing is going to be good. So why not, this is the due diligence piece. You did all the research. I think they're going to do well. So
this is mine that I'm refusing to sell.
What, Amazon? Oh,
yeah.
Should never sell Amazon, man.
Already back at all-time highs compared to 2021. Yeah. It's gonna keep impressing people, I think. So we'll see.
Yeah, I'm not gonna show you my total dollar amount, but year to date, I'm up 66%. Like,
There you go.
Yeah.
I
So
have to do I don't know what I'm up in my Fidelity. Probably not much
yeah.
because a lot of my things have been floundering and Rocket Lab's been, let me see. I'm not sharing screen. Okay, good.
Yeah, I got really lucky with Celsius. Like that's been one of my bigger winners, and so that really got me higher. Also, Carnival has been doing a lot of good work on my returns this year so far. So yeah, and I think, like I said, I think this is just the beginning. Yeah,
I'm at 26 for where's my Roth? Here it is. I'm at 26 for my individual brokerage account. My Roth, I'm at 11, so I'm trailing the S&P in my Roth.
Okay.
But I'm curious about my traditional. Yeah, my traditional IRA, which is a little bit of semiconductors, but then it has mostly the S&P 500. That's up 32%. So,
what's your biggest laggards in your portfolio? What are some of your bigger laggards?
Laggards.
Yeah, like they just haven't been performing as well as you had hoped.
I'm just always double checking. I'm not sharing.
I mean, mine is definitely Snowflake, but the thing is, my position size is, it's not small, but it's not small. Like it's not big either. And the other one that's been somewhat of a laggard, which I don't have a problem with because I think it's a great company, is Hershey's. I think Hershey's is going to do okay as well. There's just the thesis on Hershey's is primarily, something that's unrelated to the core business. It's to deal with the underlying commodity. And that's the thing, like even with oil and natural gas, when you're buying oil and natural gas stocks, half of it is you understand the company and what they're doing.
Yeah.
But then the other piece is understanding how that commodity, the underlying commodity, is performing. Because if you think you're bullish on the commodity, that's when you buy into oil and natural gas stocks. And if you're bearish on the commodity, then take something off, because it eventually makes its way into the company's earnings. And the thing is, some companies are smart and they can hedge to a certain degree, but I don't know any driller or any major that exports their entire production. Like it's just, I've never seen that. Have you ever seen that?
No, that's a lot. I mean, I just think it's going to be difficult to export all of your production. I mean, it's just so much. I mean, there are some more LNG than anything that I see, because a lot of the times this LNG, specifically where I see it, you have to build an LNG plant because you're going to be exporting for a long time, right? That's why for the long time the U.S. was building import facilities, not export facilities. Then we started turning the drill bit sideways in hydraulic fracturing, and next thing you know, we unlocked a crap ton of gas. And they're like, hey, we should probably export this. But companies like Trinidad, that's why I was down there, not companies, countries like Trinidad, million people, they don't need a lot of LNG, right? And same thing with Indonesia. They don't need a lot of energy. It's growing for sure, but comparatively to how much energy they actually have, you have other established economies that can use it, specifically for like fertilizers and things like that. But laggard in terms of my portfolio, SoFi has been one. I let Tevis convince me to buy like 20 grand worth of SoFi. I didn't really want to, but it's 20 grand, so it's not that big of a deal. And then one that's kind of I'm upset about was NextEra. I told you guys Monday or last week, I forget. That one is on a tear. It's pulled back like about 7 or 8% since then, and I'm pretty upset that I didn't sell. But that one's a long-term kind of dividend-focused play for me, more so to keep it in the portfolio. I think it's just a really good company that'll continue to develop. Of course, it ran up quicker than I wanted it to, but it's going to pull back, and I'm sure it'll be fine. One that I don't talk about much, but I always have had in the portfolio is I got caught with the falling knife of Alibaba at $200 a share. And so I have about 180 shares of that. So it's not a lot, but it's about like 14 grand. And I think eventually the value will be unleashed in Alibaba. It produces a crap ton of money. I just think it's the fact that it's what is it, VIE, which is like a variable interest entity or something like that. That is technically like you own a Bahamas company that owns shares in Chinese stock of Alibaba, right? So it's like, it's kind of a weird situation because technically I can't own Alibaba directly. So you have to own kind of like a VIE to be able to own it. And then I obviously got caught with my hand in the cookie jar, as TJ would say with that one.
I want to mention something really quickly. So I bought some Tellurian and I told people how much I bought, and people were free. They're like, oh my God, you took a really big position. And I was like, I have a 7-figure portfolio, so it's not as big for me. And I think it's the same thing for you. You're at 7 figures in your portfolio. So the moves that we make are, they're proportional. So if you have a portfolio, you should remember that as a proportion. Don't go based on the raw number. It should be more based on percentage, and no single position should be like so deep in your portfolio that that you're completely relying on it. The question now, though, Matt, and maybe this is the last thing before we head on out, when do we start shorting Nvidia?
I've been thinking about that. Not really, but I've been wondering. I mean, it's such on a moon, but I don't know. We could do, instead of actually shorting it, which I think would be absolutely dumb to do, you could always buy spreads, but in the opposite direction that people normally buy spreads. Yes. And so at least you limit yourself to, if you do go the other direction, you're not completely destroyed.
Wong is asking, did you move out of SoFi? Hell yeah, man. When it was like $11, $12, I got the hell out of SoFi. I was like, bro, their UI is just garbage. I remember I got so much crap from like the SoFi community, but it's okay. It happens. So someone's like, sell call spreads? No, that wouldn't work. Now the problem, okay. Here we have to do it in a way that's asymmetric, okay? Because at the end of the day, the chances of us losing money are higher than actually making money on trying to short a company that, one, generates a crap ton of operating income that can literally buy back itself. So I would not for the life of me try to do that. This one is definitely going to be a timing play rather than a more value sort of thing where you just buy like a long dated put on Nvidia and and then watch it collapse on itself. Because the premium that you would be paying is just astronomical. Look at the premiums that you're going to be paying on this damn thing.
Yeah, let me get to. Yeah, you're going to be paying about $10,000 just to buy an at the money put.
Yeah, that's crazy. So I'm not doing that. So I think bigger than this would be timing, and the way that you would do it. And this is not investment advice, so don't take it. Is every week when you think the top is in, you buy a very, very small position as a put that expires on a weekly basis. So instead of 71 days, go to, let's say, June 14th, right? Yep. And what you would do is right now, what's it at 1203 or 1200, yeah. Right? So you would go to like, let's say $1,100, right? And buy right there. You would buy one put for something like this. So it'll cost you about $695, right?
$700, yeah.
And now here's the thing. The likelihood that this is going to basically expire worthless is high. Definitely going to be high. But here's the thing. Whenever you look at companies like this that have moonshots up, they typically, when they correct, it's a violent move down as well, that a lot of the options markets don't necessarily factor in. So this is where I'd say, you'd probably have to buy one put contract every week and basically pray that that's the week that hits. Because if it hits, it could drop down to like 700, in which case now that options contract ends up going from $6 to 600, right? So there's a huge asymmetric return where that $6 put all of a sudden now turns into, $600 turns into 6,000. Yeah. Now the thing is, remember, you're going to be losing 600 every single week. So you have to be ready to weather that loss every week. So, that's the only way I see this working out.
I didn't tell you about this one, Mr. Patel. So, I'm long Bitcoin. Yeah.
Yeah.
So I know you and Mr. Amit, you're not the biggest fans, but So what I did was I bought leaps on these at the 25, I think. So I bought them for about 550, so I'm up a little bit on them. And then what I'm gonna do is I'm gonna sell like weeklies or bi-weeklies on them for slightly out of the money. So I think what I did is I sold like the 29.5 for like 17 cents or something like that. So and I'm just gonna slowly chip away at it. The hope is that, you know, I get an increase the distance between this $25 and, you know, whatever it is over time, and it'll move up. The hope is that it goes to 27 or $28. Like right now it's at 26.70, which I think is slightly above where I bought it. But the hope is that it continues to go up over time. And just like what we did with Celsius, I'm able to sell the higher strikes and get way more money. I'm not going to double down, right? I'm just going to keep it as a but the hope is that sometime in early 2025, mid 2025, when the price gets to where I want it to be, I only need it to go to $30 or something to break even. It's like $30.50. So it's really not that big of a move. So if Bitcoin actually does double or triple, this thing's going to be pretty far up there. But the hope is
someone keeps mentioning this one in our chat. We should probably check it out. Look at this. It's called Clean Harbors. Is an American provider of environmental industrial services, including hazardous waste disposal. You know what? I love companies like this. This reminds me of like waste management.
Yeah,
you know, where it's they're very overlooked, but in terms of like total growth, they're great. You know, let's see, waste management.
When you pulled up when it said Walmart, I thought it was waste management. I was like, oh, they did a split, but no, waste management.
Yeah, no. Like waste management in 2012 was $34. Now it's like $202. So this is like a company that you can hold for a really long time and make money, because the business is not nearly as cyclical, where there's like everyone needs to get their trash picked up.
You know who turned me on to that one was Bill Gates.
Yeah,
he had his fund, and then I also Bill Gates also turned me on to railroads, and this one's a pretty good one for you. Am I sharing my screen? I was, and then I stopped like an idiot. Hopefully, I wasn't sharing anything important. This is one that I've bought in and out of in the past. And I think I sold like at this peak here back in 2014, and I thought I was a genius because it went on this like drop off. And then I sold again somewhere here, but I don't remember it. I never wrote it to the top. But this is one that, you know, when it gets out of favor, it always generally trades at a premium because it's a great company. So it always generally trades in the high 19s to the low 20s. So if it ever comes out of favor, that's one to potentially look at.
For me right now, that's one of the bull cases I have with Hershey's. Look at this. Hershey's, once again, it's consumer packaged goods. People are basically just, you know, buying and eating and, you know, enjoying chocolates. And it's like I said, like it's up and to the right? People who doesn't love chocolate. So you can see here in 2009, it was about $38. Now it's about $192, but literally less than a year ago, prior to cacao prices jumping, it's trading at almost $275, right? So what's interesting is companies like this, they have momentary weaknesses that you should definitely be considering adding. Like you see right here, like 106 in 2015, and then something happened and it dropped to like $86. So everyone's like, oh my God, this is a like shitty company. I'm not going to be in it. But the thing is, if you had just held,
it was, I know exactly when it was because I actually had it back then.
Yeah.
Everyone is giving them crap because they bought Shanghai chocolate or something like that. And it was a Chinese chocolate company. And everyone was just like, oh, you guys overpaid. And this is another reason why I got out of Hershey. So a lot of the stock is actually earned by the Hershey Trust. And that is a very, I don't know if it still is, but back like 10 years ago, very corrupt organization that basically took all the dividends and then we're kind of manipulating, right? So the company itself doing phenomenally, right? But then you have this main shareholder that's like incestual as hell. I probably shouldn't say that live, but it basically was just like this.
And you're from Pennsylvania. You're from Pennsylvania.
Misappropriating, funds that should be going to schools. And don't get me wrong, the Hershey Trust has done a lot of good things, but then there was a lot of other things that were probably overlooked that should have been slightly better. But somebody asked if I'm selling puts on BITO as well. Yes, I'm selling a small position, right? Like 4 contracts at the money. Worst case scenario, I have to buy, $1,000 worth, or what's that, $10,000 worth of BITO, which in the grand scheme of things isn't that big of a deal. The hope is for me, that was a June 28 put that I sold for about $2.50 each. So about $1,000 for 4 contracts, a little bit more than that. And I'm already up about 40%. So I could close it out for a $400 profit. And that's kind of the hope, is like Bitcoin stays where it's at or positive. I wouldn't be doing that if this was 2025 and the price was double or triple what it is today, right? I think it's because we're in this market now that's being supported at the 65-70 range in terms of Bitcoin actual, not BITO. I have a feeling once it moves forward, I'll probably. So I'm taking the opportunity while I can, because I don't think I can for very long.
Right here, the Hershey company manages $21 billion of endowment. Jeez, that's nuts, man.
You want a rabbit hole? Do some due diligence for your Patreon on that.
The Hershey Trust, bruh, what is this? They own real estate. Dude, some of these, what are they called? Some of these like foundations, they have more money than most private companies. Not private companies, like public companies.
Yeah.
Like
University of Texas and A&M and Harvard.
Harvard has, I think, 30 billion some odd, roughly, like in endowments. And it's just every year they just keep growing over and over and over. So whatever. Is Chris more bullish on Norwegian than Carnival? Yes and no. I know that sounds very weird, but
for different reasons. I think you're more bullish that Norwegian's going to continue to invest through the cycle, whereas CCL is going to clean up their balance sheet probably a little faster, right?
Yeah. So it's kind of return potential is higher in CCL, but NCLH is safer. So, it's risk to reward, and you have to do it in your head to say which one do you want, and which one do you believe to be the thing. So remember, every thing you buy and sell, you have to do a risk and reward calculation in your brain saying, okay, what is the total return I could get by buying this company at this price? And what is it likely to be in a few years from now? And I think Norwegian has a clearer picture going forward than Carnival does. Now, here's the thing. That can change. Remember, the thesis is always evolving. I think a lot of people, they think you can just basically, invest in a company and not rearrange your thesis. And unfortunately, that's not how the business cycle works. Business cycles, they come and go, and they can really distort things. So even a forecast, all it is just a forecast. And the thing is, as an investor, your job is to become good at forecasting and figuring out, okay, where's the best opportunity where I take the least amount of risk for the most amount of reward. That's your alpha,
Well, I appreciate everybody. 120 people in the chat, Mr. Patel. So it's a good testament to people wanting to hear what you have to say about the markets. Just because subscribers only can chat doesn't mean it costs anything to subscribe. Subscribing is free. We don't currently have a membership or anything like that. Maybe in the future we will, but be sure to subscribe, especially if you want to chat. You have to be subscribed for like 5 or 10 minutes before. That's just to make sure we don't have random people coming in that are chatting about nothing and trying to detract away from the great conversation that you guys are always having in the chat. But subscribing is free, so don't hesitate.
Yeah. And by the way, don't hate on Strongman. Okay, I like Strongman. He's a good guy. All right, he's just he's a persona. And he banks on that persona, but he's a good guy at heart. Like I've been in his chats before, so I don't think he's malicious at all. I just think that he's created a persona, but it's like the evil persona. But inside, he's actually a pretty good dude.
I agree. I agree with a lot what he says too, right? You do have some people out there on YouTube that should not be, right? And I guess some people would say, Matt, you don't have a finance degree, you don't have. And it's just like if you go back to my videos when I started back in 2016, 2017, they're on my channel. I mean, I didn't know what the hell I was talking about. I was just excited that I was making $100 a month in dividends. That's the reason why. And my thought process is I'll either have nephews or nieces or kids that'll eventually be like, how did Matt manage his money? And it's literally all here. They literally can watch all those videos. And that's the whole reason why I did it. And then as I actually started getting some followers, like what I have like 12 or 13,000 now or whatever. And then you have 9,000 or whatever on Twitter and stuff like that. It's like the reason why I did the video sort of changed a little bit to be more like how I can help others rather than strictly documenting myself. But I understand what Strongman's trying to do, because you have somebody that invests in something one time and they feel like they need to tell the world, and it's kind of like, but at the same time, I was there once too, so I get it.
Yeah. Everyone's trying to grow their presence. The hardest thing, and I told my wife this today, I said, eventually I'm going to quit social media completely. Not because I don't like putting my ideas out there, but because eventually the toxicity of social media, it can get a little rough, so I have a target in mind. If I get to that target, I am going to quit social media completely.
Financial or followership?
Both. I'm going to end the Patreon. I'm going to stop posting on Twitter. I'm just going to like disappear into obsolescence, where everyone will be like, hey, remember that guy? And that's it. Because I'm a firm believer in the concept of, like Batman, either you die a hero or you live long enough to become the villain. Yeah. And I saw that with Meet Kevin. I see that with Jeremy from Financial Education. I see that with Graham Stephan. All these guys, they just couldn't let it go. And now each one has basically turned into a monster, right? Where Andre Jick and what's his name, Graham Stephan, has started promoting, like, y'all are millionaires. Why are you promoting some stupid thing? Meet Kevin, like, all of a sudden people are digging into your past, and like you're getting caught with a DUI, and sometimes you come on stream and you're doing all this goofy stuff just to be relevant. And the thing is, when you start chasing viewers, you chasing things, you no longer are basically loyal to your core ideals. You're basically just trying to sell a course, because you've created this lifestyle that is never enough. And the thing is, for me, I've set a hard goal for myself, and once I hit that goal, that's it. I don't care. I told my wife, fuck it, we'll have enough money where you will be retired, I'll be retired, and we will just chill. Now
so
the
Dave
thing
Chappelle
is,
did.
yeah. Oh, and that's why Dave Chappelle is the GOAT. He went on a high note. No one can say Dave Chappelle is a piece of shit. Yeah. I mean, some people can because of his transgender jokes, whatever. But the point is, he controls a destiny. And I want to be in the same boat where I don't want to end up like, jiving and shuckling for views, basically.
Yeah.
Do you have a number like that in your brain, or you're just like, yeah, I'll see where it goes?
That's like when the more I do and the more I've gotten to, I mean, the number, you can always dream up more money, right? But I'd say I hit my goals pretty well with respect to where I'm at and being 33. I put like a really high target out there and I hit it, so, but I'll always be present, but will I be doing things like this? It depends, right? I mean, I might, but like right now I still read the chat. Like if I had, way more, I probably, like right now my DMs are open. Like I had several people message me today. It's Cashflow Chronicles going to be on. So it's like, I often wonder, when you have as many followers as like a Jim Cramer or some of these other folks that are out there, how do you siphon through? And I already have problems with that because of Twitter, YouTube comments, my other businesses. So then when my family and stuff messages me, they're like, you didn't answer. It's like, I get so many messages, right? Like why? Like I often will miss people's stuff. So it's like, how do you actually manage that?
I mean, to be honest, I feel sometimes the toxicity comes over me as well. Like I'll I won't spend as much time talking to my wife, and I'll be addressing things on Discord, or I'll be addressing things on Twitter. And that's the thing, like your loved ones are the ones that really are the most important part of everything. So like I'm doing all of this for my loved ones. At the end of the day, that's the only people that really matter to me. So, you know, like what am I like? Meet Kevin right now, wakes up at 6 a.m. every day to do a live stream, takes away time. Every time he does that, you're taking away time from your wife. You're taking time away from your kids. Sure, you can say, well, I bought my kid a Ferrari, but you really think the kid is going to give a shit about that Ferrari, or gives more shit about spending time? Like, I want to spend more time with my dad. You know, he's retired now. He's in India. He's like, why don't you come to India and stay with me for a month? Right. Like, right. I can't do that because I have a job right now. Right. But eventually, if I could quit my job, dude, I'd love to just go on like a road trip with the guy and say, hey, you know, let's go enjoy it, you know.
I like that optionality as well. And Junebug just asked the question, like, what motivates you to keep creating content? And a lot of it has been, you know, I still have this underlying fear that I work in a very cyclical industry and I'll get laid off any day. Right. And I literally, I talk about this quite a bit, so apologies if it's like beating a dead horse, but like, I came in when oil prices were like 80 to $100 a barrel, and we could get $25 drinks at the Christmas party, and nobody would bat an eye. You know, I was drinking like, you know, Glenlivet, like 20-year, and you know,
Macallan.
18.
I'm more of a Macallan guy.
Yeah, like I think it was Macallan. It was like Macallan 18-year and stuff like that. And nobody would say a damn word, right? It wasn't Macallan 25-year because I don't think that would be $25 or under, but. It was like Macallan 18, and nobody would bat an eye. To the literally within 18 months of me joining, I literally saw 30% of the people that I worked with get their heads, you know, just unfortunately cut off. And that's just the industry that we kind of work in. And so, you know, and I've seen it happen a couple times now, and I've been fortunate to never be affected. But here we are. Oil prices are going back down again. I'm always a couple months away from, unfortunately. So I like to keep that door open. Honestly, I like helping people, right? And it demotivates me a little bit. This is why sometimes I'll step away, because I have been doing this since 2016, 2017. I do, at the bottom of my heart, believe that I was put on this earth to help people. So to me, the way I do it on a day-to-day basis is I help provide energy for the world, right? I look at that and I think about the millions of barrels that I've helped contribute to society. Over the last 10 years of my career at UDoc. And to me, I view that as helping people. And I view what I do on YouTube as well as helping people. So when I kind of feel like I'm just like a little bit of a clown or like a jester to people getting to a place of just give me the ticker symbol fat man, like I don't care what your insights are, that's when I kind of feel like I step away. And that's sometimes why I step away from like Palantir as well, because it's like nobody actually cares. They just want the stock to moon, and it's like that's not the reason why I'm putting out the content. The reason I'm putting out the content is to understand how my mentality got me to where I was, because I've made hundreds of thousands of dollars worth of mistakes. Right? Yeah. I told you about GameStop earlier.
Same here. Cobalt Energy. I still to this day freaking remember Cobalt. Someone said something very poignant. He said, you don't have to leave, just don't sell out. And unfortunately, you know, sometimes a situation gets presented to you in such a way that you're forced to sell out. And let me explain how something like that can happen. Let's say right now you become a good YouTube personality. People follow you. People regularly tune in. So you feel like, hey, you know what? I have a captive audience. I need to keep providing value. And so you keep doing that. And then your lifestyle kind of changes to the positive. You're making good money. You know, you've got ad revenue coming in. And then what happens is you change your lifestyle to meet that additional income, right? So you're like, oh yeah, you know what? I'm going to do this. Now what happens is, let's say you have a couple of bad quarters. Now viewership starts to go down, but your lifestyle has been tailored to that better time. Now you're trying to make up for that by doing crazier things. Now you're trying to lean into, you know, viewership, and you start acting crazier and you start doing crazier stuff. And then your income, to supplement your income, you start to say, you know what, maybe I'll go with a brand deal or a sponsor. And you know what, they may not be 100% reputable, but whatever, it pays the bills, it gets you from point A to point B. And now, especially if you develop a team around yourself, you become beholden to that team, because that's the other problem. Like Meet Kevin and all these guys, they have people. I'm not sure everyone, but Meet Kevin definitely has a team of people that he's employed to make his production quality high enough to the point where it provides value to people. So for him, he's not only looking out for himself, he's also looking out for his employees. So
Mhm.
now he feels obligated to, to basically keep things going. And so that's like any other business, right? You get to a certain point in your business's growth cycle where you get to the point where you can't just live, and you're always constantly chasing forward stuff, and that can be a big detriment. So that's where investing comes in, where if you invest now, take that additional capital and let that money make money for you, so that you never have to reach out into that community of grifters, where you have to like go into the more speculative plays just to get people to follow you. Like, I know some people are like, hey, take a look at this speculative name, and I'm like, fuck no, I'm good, no thank you. I'm not
Yeah.
compromising myself for that. But if, let's say, I was beholden to people because my investing is not working out, then I might be more inclined to be like, hey, let's check out this next, crypto play, and, and basically sell that shit, So like I said, I feel for these guys. I don't believe a single one of them is a bad person. I think each one of them has provided some level of value into the communities that they've developed. But at the same time, I feel like this is where content creation goes from enjoyment to work to basically now you're just basically dance monkey dance. You
Mhm.
know, you look at Jake Paul and all of these guys. I mean, what's his name? I Show Speed. He does crazier things every year. It just seems like these guys are going absolutely crazy. So at what point do you just say, you know what? Screw this shit. I'm done. And it's hard to walk away because it does. By the way, it is addictive when you guys comment, you guys talk and stuff. You feel important. You feel like, oh, I'm somebody. And that feeling, it can get addictive, but you have to take that away and be like, look, I am still just a normal guy. Yes, there's a few people that think I'm smart, but I'm humble enough to admit that I'm still human. I still make mistakes. And I'm gonna make a lot of mistakes going forward. I just hope that those mistakes aren't big ones. And that's it. Don't you want like 9 nannies for your kids? I don't have any nannies. I don't have any kids. We're working on that. So when it happens, it happens. But you know,
Yeah, man. But
yep.
yeah, I hope I never leave. That's my hope, is I have the ability to keep helping people. But I also recognize that, and I've noticed this as well over the years. I used to be very relatable.
Hmm.
I'm not as relatable anymore because I'm like, oh, I got 16,500 shares of Rocket Lab. It's just like, that's like 80 grand, bro. Like, how easy is that for somebody? And then you have the other people that are like, oh, it must be his only position. Let me full port Rocket Lab. It's like, no, that's not what I'm saying. So you
Yeah.
have that piece where I always try to focus on this, whether I'm at work, whether
Yeah.
I'm focus on what the message that I'm trying to get across is. And sometimes I feel like it just gets really um,
Yeah.
lost.
What's interesting is something that Gail said. I think the algorithms are designed in a way that selling out is the only outcome. Absolutely. Absolutely. Like, it's sad, but that is very true. That is very true. So hopefully we can not get addicted to the algorithm and we can still be our own people. Because one day I'd like to just hang out with Matt and have a conversation outside of doing it for YouTube and just be like, hey, Matt, what's going on? You
Yeah.
know,
Yeah.
because that's also one of the other things I do like about YouTube. I think if anything, our meetup in Las Vegas last year was a highlight for me because I felt like I made really like good friends, outside of this investing bullshit. It's like, no, I met some people, they're cool people, it's nice to see people interact with them, like Heinze,
Yeah.
Michael Wilder, what's his name, Zocold, all these people, they're just
TJ,
like
dude.
like
TJ's
us.
a fucking riot, dude.
TJ and TJ's wife. I met you, Matt.
Yeah.
I met Carlos for the first time. So all of
Yeah.
these things, you develop some friends, and once you get to a certain age, it's actually hard to make friends
We
outside of
gotta
your
agreed. I was
circle.
actually thinking about that the other day. I was just like, man, I was like, other than like my
June,
high,
June. I forgot about June.
yeah,
Sorry,
Junebug.
June. Yeah.
I had a lot of good conversations with Junebug. I was like
Yeah.
talking. We had a really good breakfast one morning. was a group of us. I think 8 of us. Chris, you might not have been there yet, but we went out and we got pancakes and stuff, and me and June were chatting up a storm. But yeah, that we got to plan out what JunkieCon 2.0 looks like, if it even is JunkieCon. I don't know what we can call it, but JunkieCon's fine with me. But yeah,
I think we do a cruise line, baby. Let's go on.
That actually wouldn't be a bad idea. I would love. I've been thinking about.
There's no planning. You just do a cruise. You just book a ticket, share the itinerary, be like, "This is the cruise ship. We're going on the Junkies cruise," and just go.
I'll
quick, easy.
Any particular port you want to go out of? Any particular?
I mean, there's plenty in Texas. There's plenty in Florida. There's Galveston. That's where we can go to California. I think LA has a few cruises that go to like Hawaii or whatever. My personal preference would probably be like not the Mediterranean, the Caribbean. Caribbean would be nice, like around that area. So
I'll look for something. I'll look for something that's like 3 days, some that are 5 days. I would love to do something later.
3 to 5 is usually good. 3 to 5 is usually good.
Yeah, 7.
And there's gambling on board. Which
That's
is why me and Garcia will be at the craps tables like we did last time.
Do you know how much I lost in Vegas?
How much?
It was like $2,500. It wasn't a lot, but I mean,
whoa, you lost money?
Of course. Craps? Yeah.
I don't know, bro. I came away broke even. That is my like win. If I just come away break even, I'm good.
The problem with craps for me is like I'll go on a bad losing streak where I'll lose like $600, and then
walk away,
and then I don't, and then I do walk away, and then I come back, and then I'm like feeling like I'm hot shit because I won like $200, but I'm still down, and then next thing you know, I lose another 600 like in super quick succession. Like the tables is super cold. I'll never forget. We were there for March Madness in like 2018 or 2019. It was for my one buddy's bachelor party. And he was like, I was like, I just need to get away. I was like, this is too much basketball going on. I'm not the biggest basketball fan. And so I was, I'm a college football guy, that's my sport. And I was like, let me just go play some craps. So I went off by myself. The dealers literally looked at me like, don't come to this table, bro. Like, don't. And I was like, what do you mean? And they're like, maybe your luck will change. And of course, it's like literally within like 4 or 5 spins, I'm down like $400 or $500. And they're like, we told you, man. And literally like 2 or 3 hours later, I'm coming back down. The same guys were like, don't bring your friends to this table. And I told them, I'm like, no. I was like, I lost $400, $500 earlier on this table. I'm like, oh, maybe our luck will change. We all just started hemorrhaging cash. I'm like, I literally, and they also told you, like,
yeah,
I don't know.
So I think the best was Garcia. Like I showed Garcia how to play craps on like one of those bubble craps machines. And I was like, oh, look, Garcia, you just do this. And he's like my wife. My wife, I showed her, and bro, she got addicted. Like, push the button, push the button. Yeah. So Garcia, I leave. He's like, oh my God, I'm winning. This is great. And then I come back the next day. He's like, hey, Garcia, how's it going? Oh, bro, I lost all my money. I just started going on random shit. It just didn't work out. I said, yup, that's how the casino works, man.
That's how it works, man.
The longer you play, the more likely it is that you're going to fucking lose all your money. So you have to make sure that once you're up a certain amount, you fucking walk away. Just like, that's it, I'm done. Like, no, Mr. Vegas, you are not going to keep me here. And it's really hard to fucking fight the urge not to just be like, I'll just play a couple of rounds. It's going to be okay. Yeah. I mean, the way that I mitigate that is I'll have my bet pocket and my winnings pocket. And what I'll do is I will basically use up all the money that I'm betting from my bets pocket. And anytime I win, I just pile that into my winnings pocket. And I never, ever take the winning pocket and put it into my bets pocket. And so what ends up happening is either I break even or I lose a little or I come out ahead, But basically, once I'm done with my bet pocket, that's it. I'm cut off, and whatever is in my left pocket is what I have, and I'm golden after that. So
I think I used to be a lot better about cash flow management, but now I look at it like I used to show up with like $1,500 and be like, all right, I can't lose this. Right now I show up with $2,500. I'm like, meh, if I lose $2,500, it's not a big deal. So of course, if I lose $2,500, so it's like, I don't know. I think my mentality's wrong. I have to look at it like it's the only $2,500 I have, and maybe I'll win. I don't know.
Mm-hmm.
Cool. All right. Well, I'll look for cruises.
Planning on any vacations? anytime soon?
So I'm going up to visit my mom in July, and then I have been planning about. I have to go back to the somewhere in undisclosed European location in September. So I'm trying to find between July and September where I'm going to take some time. So hopefully it could be Junkie Con, but I
Okay.
need to go see a new
Property. You know,
no, I need to see a new country. It's
gotcha.
been too long.
Yeah.
And I went back to Mexico with Tevis. Not that I disliked going to Mexico with Tevis; it was blast. But
he convinced you to buy SoFi, so you lost money. There you
I
go.
did. I'm down like $2,000 or something on that. But
So
yeah,
basically, you're down. You need to go on cruises with guys like me. See,
exactly.
And go into places with me because that's how you win. You know,
I need to
enough winners. You get the soap. It's like not soap, but it's like a sponge. You hang out with winners, you become a winner.
You become a winner. But that's the thing, is like all the places now in the Caribbean, all the like independent countries I've kind of been to. Now it's all like territories of other things, like Saint Martin and Anguilla and not Saint Kitts, Saint Bart's. Like all of them are territories for European countries, and I'm like, I want to see countries, right? Like, I'm being picky, right? But you know, I want to knock off a lot of countries, and unfortunately, you know, if you go to one of those, like Turks and Caicos, for example, I consider it a country, but really it's a territory of the UK. I don't know.
Have you been to the Azores? It's owned by Portugal. Azores, it's off the coast of Africa. Yeah, it's really beautiful. Azores, I think that's what it's called.
There's another one. It's like the Seychelles. Is the Seychelles Northwest Africa?
No, I think
Seychelles is east, southwest of India. What's the ones that are like? Oh, Cape Verde. Cape Verde is so northwest of Africa.
Seychelles is in the Indian Ocean.
Yeah.
But yeah, the ones I was talking about, the Azores, they're like a chain of islands off the coast of Africa, but the Portuguese own it, you know, so it's really nice. Like I looked at some of the pictures from there. Let me just show you guys what it looks like. Hold on.
Yeah, and the hope is in September I'll be able to do a little bit more touristy stuff. Last time I didn't plan it very well when I went to Europe last time.
This is what the Azores looks like. Kind of cool, right?
Beautiful. That's beautiful.
Yeah. Yeah. So, all right, brother, man. Well, let's get out of here. Talk to you later. Thank you, everyone.
When are you thinking about next? Sunday, or do you want to do something tomorrow? You tell me.
Let's do Sunday. I think Sunday would be good, only because this way the labor report will come in. We'll get a better idea. You know, I think the Fed is next week also, so we can probably take a look at some of the rate moves that they're likely to do. You know, I don't think that there's no reason why they're going to cut. So, you know, but they might be somewhat bullish on the possible rate environment going forward, which could rally the markets a little bit. So, just a lot of data has to be processed, and we'll talk about it. So let's do Sunday as the next.
Sounds good. I'll look for some cruises. I'll let you know if I see anything.
All right, sounds good.
You rock, man.
Take care.
Cheers, all. Bye. His eyes, Mr. Patel.